We did hit or exceed all of our milestones for the quarter and the year. Obviously, the investment bank was the strongest area as we both saw franchise improvement that we talked about in earlier quarters, as well as benefited from a strong market environment. I will say that the corporate bank and private bank have continued to execute well on their strategies. And those strategies have helped them to offset the headwinds they face from interest rates. And asset management also had a very strong quarter with 14 billion euros of inflows. So the short answer is all four businesses are performing well in our view.
Do you think that this investment banking momentum, which we have seen last year and also in the fourth quarter, can be maintained and carried over in the new year?
Well, of course, that's a big question. And I think our view would be similar to others, that there will be some degree of normalization this year. However, so far in the year to date, we've seen the momentum from last year really carry through into January in terms of our performance and what we can see about the market environment.
Do you think M&A activity will pick up this year? Because clearly the markets are close, if not at record highs, so it could be like the momentum going away for it.
I do think so. There are a lot of sort of structural supports for what drives M&A. So valuations on the one hand, as you note. I think greater confidence now coming into boardrooms as people react to a better economic outlook after the vaccination programs take effect. But they also need to react to a post-crisis or post-pandemic strategic environment where for a lot of industries things have changed. And I think you'll see that taken up in terms of strategic activity.
Talking about the investment bank, once again, it has benefited a lot from volatility as well. Mm-hmm. So what are your expectations when it comes to volatility of the equity markets, but also the fixed income markets?
So leaving the events of last week aside, we would think that volatility begins to subside this year and again normalize in whether it's in FX markets, rates markets, or equity markets. Now, of course, there's uncertainties in the outlook, and so that can take some time, or it can also go into reverse for a period of time. But in general, I think the very outsized volatility that you saw, particularly late in the first quarter and in the second quarter of last year, is not something that we'd expect to see at least in the near future.